It's one of my favorite toys, Mark. I've got to get an LED one, though. I need that now that I've seen them, on the digital movies and all the rest. They're using these, but they light up. I need one of those. Folks, he is Mark Lopresti. I'm John Najarian. We're here with the Rebel's Edge, and we're down in Miami for Art Basel and a whole bunch of meetings with some of the companies that we're working with, Mark. You've been Baseling for years, right?
I have. This is probably my, seventh or eighth Art Basel experience. If you have never done it, it's definitely something worth doing at least once if you don't mind absurd traffic, paying 3 times the price for hotels, Ubers, not being able to get a restaurant reservation. But really, Baseling, which has become a verb now, is the art of being invited to as many Art Basel related as possible parties and going to none of them, which I think we did a good job because a friend of ours actually compiled a list, a spreadsheet, John. Leon did a spreadsheet. We were invited to 143 events this week. That is, wow. I'm not exaggerating, folks, 143 events.
Well, we were invited to the Ferrari event this afternoon. You and I will be there this afternoon.
Yes, sir.
We were invited to Vanderchuck to his party. We were invited to the Players Impact, TPI, and something else. Those are just the ones we're going to go to tonight.
That's right. And a good one with Wheels Up on tomorrow, I think, if we can make it.
Fantastic. So, folks, you know what the Rebel's Edge is about. We're not about macro. In fact, we just don't do 1 minute of macro on the Rebel's Edge, and we're about to kick that off right now with Mark Lopresti. Mark, today we had the continued reaction to Powell's, we could slow our pace. He never said stop, and he didn't say will. He said we could. I saw a C, C-O-U-L-D, could. And we've got housing falling into disaster territory. We've got the open, job cuts at up 400%. Those are my macro minute, Mark.
Well, listen, the market loves anything that Jay Powell says that sounds more dove than hawk. And this is some of the most dovish commentary we've heard from Chairman Powell in a long time. NASDAQ and S&P closing yesterday up 4.4 and 3.09, I think, roughly, respectively. Market off a little bit as we went into Rebel's Edge, off about 200, waiting for Friday's jobs reports and some negative information out of Costco. But at the end of the day, don't fight the Fed. The market's still being buoyed, in my opinion, by this more dovish tone from Jay Powell. But we ain't out of the woods yet.
Nope, that's a fact. And by the way, folks, other than just here on the Rebel's Edge and a number of streamed shows that Mark and I do, you might recognize him also from Fox Biz, Fox News with Maria Bartiromo, Fox Biz with Liz Clayman, along with a host of others. He also, speaking of hosts, he does host a weekly Sirius radio hit with, I think, the good folks over at, University of Pennsylvania, Mark?
No, sir, Harvard.
Oh, Harvard. Oh, hoi polloi.
Yes, which I actually attended. I attended a lunch there once when I was visiting colleges I knew I would not get into.
Well, folks, we're going to kick off the stocks that we're trading today with CRM or Salesforce. Yes. And this one, Mark, I know a lot of your expertise. Again, one of Mark's areas of expertise, folks, is he is a recovering securities lawyer. And you have to be a little suspect of exactly why the co-CEO, Brett Taylor, over at CRM just decided, I'm out. What does that tell you, Mark, as an outsider, but with inside knowledge of how those sort of boardroom situations work?
Well, a couple comments on this, John. Number one, and I know that I'm often challenged to agree with everything our friend Jim Cramer says, but I do agree with Jim that Mark Benioff is one of the most talented CEOs in tech and in software, and the success of this company largely attributed to Benioff's talents. Why he needed a co-CEO in the first place, I never understood. It clearly didn't work out. Very unceremonious departure of the co-CEO, the market reacting accordingly. And I think this is a blip, though. CRM is still a company and a stock that I believe in. Stock trading around 144 and change just before we went live, if I remember correctly.
Yep.
JP Morgan still slashing price target by $45, but still with a $200 price target on the stock. So what do you think, John? Attractive at 144 on this big
Yes.
dip, or what do you think?
Yep, I agree 100%. And in fact, Mark, I see what is potentially a triple bottom right around 142.50, 142.70 in that range. I'm not a technician, but I do see the chart bouncing a couple times already in the past, and we're just above that level by about $2 right now. That's one of the great things about options. If I want to basically buy it, if you will, or at least make a commitment, I could sell that put, Mark,
Right.
and take on the obligation of buying it if it trades below 142. And that's something I'm thinking about doing right here. So I agree with you. I think this is a buy, not a sale at these levels.
All right. So we got one bull out of three. What's next up?
How about OKTA?
Mm.
OKTA, in after hours, they reported earnings that were better than expected, and the stock jumped.
Yes.
Now, the market was soft today. Right after the opening, we sold off rather hard, but it's been fighting its way back, Mark, and OKTA is up 25% at mid-session. What do you think?
Well, they didn't just beat analyst expectations. They made analysts look like complete fools in this instance. The street was looking for them to lose, I think, 11 cents a share. The company comes in, reports Q3 revenue of $481 million, 37% more year over year. That coveted SaaS subscription software as a service revenue up 38%. The street absolutely loves this thing. And here's one of the key things we're looking at when it comes to this company. They made an acquisition, John, if you remember, about a year ago of a company called Auth0. And the integration of that company into the larger enterprise was putting a lot of stress on the overall corporate structure. And it seems analysts, people watching it, notwithstanding the fact that the analysts got this one completely effing wrong, but it appears that the worst is behind the company as it relates to the challenges of the integration of this acquisition they made a year or so ago. I don't know that I'm not buying on a jump like this. So I'd be neutral on it. I wouldn't, if I was up as much as the company is up and I had a position, I'd be taking profits right now. I don't currently have a position in the stock. So on this one of the three, I'd say I'm sell if you're in the money, you're making profits, but otherwise I'm neutral on this one.
It bottomed basically I think Halloween mark at right around $45, give or take. Closed yesterday at 53. It's trading $66 right now. But the kicker is it was $244 on the 52-week high. So this has been one long, hard slide downhill. I don't disagree with you at all. Short covering's what I'd attribute it to. Yes, It was a beat. It was a significant beat. I agree with you. But I think you wait and try to pick this one up more like 60, not here chasing at 67 or higher so far today. Yeah, all right. How about this one, folks? I think about that same time frame in October, perhaps middle of October, Mark was on the Rebel Edge, and he made a very prescient call on Splunk. And Splunk today jumping significantly after they raised full year outlook. I'll let you take a victory lap on this one, Mark. Tell us what was appealing middle of October.
Well, look, we like this company. This, as you know, John, is a data play. It's data management. It's data security. It's data file transfer, all things we love. We are huge data nerds, of course, with our investment in Battlefin. I co-founded that company, as a lot of our viewers know. And yeah, a victory lap. Look, whenever we help the Rebel's Edge, and the Rebel Nation, as I call the viewers of Market Rebellion and the Market Rebellion subscribers, helping them make money makes me very, very happy. And I went back and I looked at my notes, John. We were on stage at Brian London's New Orleans Investment Conference, NOLA, the Big Easy, one of our favorite cities in the great United States of America. That was the 13th of October when we actually made a strong buy call on the stock. I think I reiterated it 2 days later on Liz Clayman's show on Fox. Stock was $69, $69.50, $69.75. So investors following that have done obviously very, very well. And I was incredibly pleased to hear the company raising full year guidance, sales and cash flow. Again, that coveted SaaS revenue looking to be in the neighborhood 3.45 to 3.5 billion, up from 3.3 billion previous estimates. Company, even at these prices, I think I would still potentially be a buyer. If I don't already have a position in this company, even with this 10% jump, I'm still bullish on it. I think it's still got room to go up.
Folks, if you take a look at what that chart of their earnings looks like, it is literally from the lower left to the upper right.
Yeah.
The last 3 quarters, it's been up, up, up. They've beat each of those. And this is pretty amazing to have 3 beats of this size in Splunk. Again, it used to be $160 stock, but this one is one that I'm with Mark. I think you hold on to this one. You roll up. I don't think you get out.
Yeah.
All right, Mark. For just one more wind up before we go on to the unusual,
Sure.
DG, Dollar General, because I know that you like Dollar General, and I know that you like buying it on dips in particular because people are going to trade down. They're going to buy some diseased box of cornflakes or whatever at Dollar General rather than paying up and buying a smaller amount at their regular grocer. What do you think after today's sell-off?
Well, so full disclosure on a couple of levels here, John. Number one, I was in a Dollar General as recently as 4 days ago. Okay. We might be sitting on a yacht at Art Basel, but I'm a value investor, as my girlfriend likes to remind me. And I am not ashamed to go into Dollar General, and the food is not. It's not all diseased. I promise you, it's not all disease. Look, I talked a lot also on Fox. I think it was particularly on Maria's show. It's sort of the end of the first quarter, but beginning of the second quarter, as we started to see the significant turn in equity markets, as the inflationary picture, the recession picture, the second quarter of negative GDP growth became a reality. The so-called dollar store trades I started talking about as a bull, Dollar General, Dollar Tree, Ross stores, under the thesis, right, that in an inflationary environment, as people need to stretch their hard-earned dollars as far as they possibly can, they're going to turn to those discount retailers more and more. And I think that's still the case. Yes, we're seeing some positive news. We're seeing not just in J-Pow's comments that we covered in the Minute Macro. We saw some good news on the GDP front. We saw some good news that indicates that inflation may be leveling off, right? Not continuing to increase, not decreasing yet, but starting to level off. So, but we're not out of the woods yet. I would be looking potentially to see that the stock was off almost 8% before we went live. I want to see where it lands today, but I am not ready to give up on my dollar store trade because I think, particularly as American consumers, before they really feel the impacts of inflation, they sort of extend that using credit cards, which is why we've seen consumer credit card balances reach levels we have not seen since well before the pandemic began, which is an economic indicator we watch very carefully, as we've talked about in the past. So I'm not ready to throw Dollar General baby out with the rest of my dollar store bathwater. I might be actually even looking to add to my position if the street beats this up further.
That's the position I'm in too, Mark. I talked about triple bottoms already. This one hit one middle of August, middle of October, same level, 235. That's right where we're at now. So I like picking it up there because, the recent high was 262. Yeah, nearly $30 higher. I would take a shot, especially on a call spread in Dollar General. All
I
right,
like that.
let's take a look at some unusual put activity, Mark, because I'm going to start with that. Google, GOOGL, Google, 8,500 of the tomorrow expiring. So these are very short term, but Google was 101.19, and they were buying the 100 puts. Now they're paying about 50 cents for those puts. So if we see any kind of weakness tomorrow, Google could easily break 100 again and move to the downside. These puts go from 50 cents to $1 or $1.50. That's either doubling or tripling your money. On the other hand, I'm not going to ride it all the way to zero if it doesn't work, Mark. By this time tomorrow, I'll be out of this trade unless the whole market was tanking, in which case, of course, Google would go with them. So that's my trade. Google puts tomorrow expiring, though, so that's deep end of the pool. What do you got, Mark?
Got to act now. Well, look, as we often do on The Unusual, especially when I'm standing in for the handsome and talented Pete Najarian, I like to take the bull case. And today we are talking about none other than BBWI, Bath and Body Works, not to be confused with Bed Bath & Beyond, as I often am as we're driving around to those stores on Sunday buying housewares, one of my least favorite things in the world to do. We've seen some bullish option activity, a bullish call roll picked up by the unusual, incredible AI engine at Market Rebellion. This is 5,000 of the December 45 calls, bought for $1.13 above an open interest of around 743 contracts. Also, as a call roll, the other side, December 40 calls, selling for $4 above open interest. The stock trading just before we went live at around 43.41. Interesting. Analyst average price target on the stock around $57.75 to $58. Highest at 76. I think that's a ridiculous price target on the stock.
That's a huge one. Yeah.
Huge one. But I think we could see this stock, if we continue to see leveling off of the inflation and improvement, continued comments, dovish comments from the Fed, we can continue to see stocks like this start to recover and benefit. I don't see the stock hitting 50 in the near term, but I think you could see it in that range by the middle of the first quarter if things continue to improve.
I like the call. Bath and Body Works, I like it as a spin out, and I think this is one that you want to keep your eye on. And it's a cheap shot. You're paying $112 per option, since every option's for 100 shares. And like Mark said, they're trading for $1.12. You put 2 zeros behind that. In other words, you move it to $112 per option rather than $43, which for a 1,000 share position would be $43,000. Instead, you can control that same for, call it, $1,200. I like that a lot better. All right, a little sports, and I'll make it quick, Mark. USC, I think they're the biggest surprise in college football this year. They had a lot of people transfer to them. They picked a lot of them up out of the portal. They're the biggest. And this quarterback, Caleb Williams, is on an incredible run. Really like that kid. I think their head coach is also, Lincoln Riley's really hitting it hard. I think they're doing a lot of things right at USC. This is one I'm excited to watch. But of course, they have to get through their own Pac-12 championship game. But I think they will. And it's a bit of a revenge game, too. Getting to the other one, though, Mark, one that is near and dear to your heart and mine, we've got a new client, Moneyline Sports. And you and I were very impressed when we met the team behind this in Vegas just 3 weeks ago. Tell everybody a little bit about Moneyline Sports and what they do, because it's not a pure play on sports betting, because they don't have any of those licenses. How do they get away with it, Mark?
Well, they do have one license. They are officially licensed in New Jersey, but this is interesting. And folks, this is part of the 1 minute venture minute that we've now done twice on Rebel's Edge. On my last appearance, we talked about another company that we recently got involved in and acquired a position in. we're covering and talking about this company, Moneyline. This is not a solicitation. This company it's not raising capital. This is not an investment solicitation. It's just an interesting company that we are proud to be involved with. And what these guys have created is essentially the Expedia of gambling apps, of sports gambling apps. What do I mean by that? If I want to place a bet on a pro game, whether it's football, basketball, hockey, baseball, I can go to DraftKings, I can go to FanDuel, I can go to any number of the other licensed online sports betting apps, check their odds, see who's offering the most interesting incentives and goodies. Sometimes they'll give you $25 or $50 in funny money to bet with, or they'll forgive your first loss, or whatever it is that these different betting houses, these online betting houses, are offering to incentivize customers to come and bet with them. Well, what these guys have created is the ability to do it like Expedia, all in one place with one login and one set of keys, if you will, from their app. So if I want to place a bet on the Jets game on Sunday, I can see through Moneyline what the lines are that are being offered by each of the betting houses, pick the best line and the best odds consistent with my prognostication on the game or what I want to bet, and see who's offering the best goodies to maximize my profit. We think that sports betting is only going to continue to grow in this country, as we have seen. They did recently receive a license in New Jersey to actually operate as a licensed sports betting house, if you will. But the idea is not to actually take bets, but to be a software layer that sits above these various companies, like an Expedia for booking flights. So excited
Mark's
about
exactly
that.
right. Just like Trivago or Expedia,
Right.
what if you could see all the prices? And unlike those two, you do see different prices in hotels, but pretty much everybody has the same airfare.
That's right.
But with something like a line, you can see who's offering that line, and you can click straight through their app and be tossed into FanDuel, into DraftKings, into MGM, into Win Sports, all of that. It's really cool tech, folks. You'll be hearing a lot more about it, is my prediction. Mark? Can't thank you enough for sitting in for Pete today. You did another fabulous job, and we got to give you credit for a great call in Splunk.
Splunk, baby, Splunk.
Splunk. Make sure, folks, that you tag Mark with a Splunk $sign when you're talking about the show today, because we're going to put out a little hit from that show later today. Thanks for joining us. I hope you have a great day, everybody, and we'll be back here Monday with a new Rebel's Edge, 1 p.m. Eastern Time. See you then.